Good evening. This is Doc Severson for the Theonite Report for Thursday, May 25th. I'm looking at the Amazon chart here for today, and it got up to about a point within 1,000. So there's this big race from the big dogs of the NASDAQ to hit the bell here at 1,000. And Amazon got within 1 point of that, and apparently overhead supply or people taking profits, that was close enough for them. But right on the heels is Google, and it's certainly going to be a contest. And also not far away is ISRG. So the robotic surgery company is also making a bid for this. So we're just having these massive moves right now. I think a lot of people are confused by the moves because we're getting into a runaway market. Now, we've seen this movie before. We know how this ends right now, even on the NASDAQ. And looking for the percentage of NASDAQ stocks that are above the 50-day moving average right now, we still only have about 66%. So even after the recent dip, it hasn't even recovered from that yet. So we're seeing this divergence where we have the overall NASDAQ just screaming higher like this, but yet the majority of stocks, the greater percentage of stocks, only 66% of them right now, are above the 50-day moving average, which generally indicates a short-term uptrend. So all the volume is just coming down to a few big stocks which are shared across the different indices, right? So between the S&P and the NASDAQ, we still have the usual suspects like the Facebooks and Apples and Amazons and Netflix and Microsoft and Google, right? So they all are shared across there. But we're looking at things like the Russell. The Russell's just barely up today, And when I move out to this virtual ticker, which we have defined as Amazon, Apple, Microsoft, Google, Facebook, Netflix, you can see that we have, just a massive move here. Now, when you have a runaway market, this is where you get into these conditions where the bears are just screaming out in pain. And also, the pain is also on the other side because it's been proven through psychologists that the pain of missing out on a runaway move is actually greater than if you'd just been stopped out on a normal stop out, right? It actually, watching this thing go without you, the thought goes through your mind that this is the last market rally that you will ever see in your adult life. And so, my God, I've got to get on this thing right now. And so this is why markets will run away, because not only are traders that are short either buying back their positions and covering, pushing it further up, or they're long delta hedging and other instruments to be able to hedge across different markets, but adding long delta at the same time. Again, if you and a million of your closest friends are all doing the same thing, it has a net cumulative effect of pushing markets higher into this. And this is why we get runaway markets to the upside. This is why we get runaway markets to the downside when everything is really, really bad. Now, just as a little bit of fun, what I'm going to look for over the next day or two is to see whether or not they're going to bring Jim Cramer out on the Today Show, and if the Today Show does lead with the stock market. So if the lead story in the stock or on the Today Show is going to be about the stock market, and then if they also follow up by bringing out Jim Cramer, then that's going to be the signal. That's going to be the puff of smoke that comes outside the chimney on the square that's going to signal that this is probably going to be at least a short-term top. Now, I do say that somewhat in jest, but it's awfully accurate. Typically, whenever we see a massive sell-off and then they end up bringing up Jim Cramer out on the Today Show, usually that's the very bottom. And we've also seen the exact opposite of that when everything is smoking hot and then they lead with that story usually. And also, the Barron's magazine or Time magazine puts the market on the cover. That's usually the point at which things start to crumble. Now, what is this going to look like when the market starts to transition? Are we going to have a move which is going to be Armageddon, which is what everybody is predicting, right? So everywhere you look, oh my God, the central banks, this and that, we're going to get a move like you've never seen before. Guys, markets just don't move like this. And so unless there's an EMP strike above the United States that takes out the entire infrastructure of the U.S., that's not going to happen. If that does happen, then we've got bigger issues to worry about anyway, right? Like getting food or something like that. No. So what's going to happen is usually it takes one catalyst, which is not priced into the market, which is enough to spook things. And at that point, we start to get the shot over the bow. And then what we'll set up is a range. Now, it's going to be a much bigger range than we're used to. We're used to these little tiny microscopic ranges that really don't amount to much of anything at all. And lately, as we've gotten into 2017, those have been ever smaller as the market slope increases to almost infinity. So again, this is typically what we get is we get a move into a larger range, and then what this allows the market to do is basically build up its energy again. Again, you know, if you're running up the side of Mount Everest, you're not going to make it very far before you have to get to a base camp and acclimate to that level. And this is precisely what the market also needs to do, is to spend some time within a range. So perhaps we're going to get that into as we get into the summer, we start to build into that range. We get into that oh so sloppy, low volatility, low volume summer slop that we all so love. But actually, I would look forward to that, because I think it's actually easier to trade that than it is to justify jumping on board a freight train like these stocks are right now. So I just cannot bring myself to just jump on board, because that is there's just no setup here. There's just no setup. There's just no edge other than to hold and pray. Now, I think tomorrow is going to be a collective swivel chair, a big collective swivel chair. After about an hour or so of market action, you're going to see volatility and volume just completely drop out as people basically step away from their workstations very carefully and hope to leave a little bit early on what is a 3-day weekend here in the United States. That is it for tonight's report. Please do something to honor the fallen this weekend. Thanks, everybody. We'll see you tomorrow.